Hilberry with National Bank Financial. It's August 28th, 2019. If you've ever thought about purchasing a second piece of property as an investment, there's a few things that you need to consider. For illustrative purposes only, let's go through some numbers. I have a client couple who live in the Greater Victoria area and they're thinking about diversifying, purchasing a second piece of property, and then living off of the rental income in 30 years' time. To get some idea of future return, I looked at the prices of a detached home over the last 30 years. I looked at the annual rate of return. I included in my assumptions maintenance costs, property taxes, financing costs, and insurance costs. And then I looked at the average annual expected rental income that they could receive. In terms of annual rate of return, my client would have received over a 10% annual rate of return over the last 30 years in real estate. If we compare that to an investment in the same dollar amount in the S&P 500, the total return over that period, not including taxes, would be just over 12%. So the real estate investment worked out. But let's assume my clients are retired today and they need to have access to the capital now. What kind of rate of return could they expect? $9,000 would be the annual level of rental income that they could receive on an investment of $900,000 today. If we compare that to the TSX and a basket of dividend-paying stocks, you can earn around 4.5%. In dollar terms, that's around $41,000. That's over 4 times what you could receive in rental income. Okay, so they're okay with the income, but let's assume that they have some extraordinary expenses and they need some more money. They need to raise another $50,000 to replace the roof on their own house and they don't have any savings. What are they going to do? Their assets that are invested in real estate are tied up in the other house. And unless they're willing to sell that house, they can't have access to those funds. If they have an investment portfolio worth $900,000, not only are they receiving more income, but if they need access to the principal, they can sell off a portion of their investments. So if you're going to consider an investment in real estate, make sure that it's part of an overall portfolio and it's not your only asset. Otherwise, you could run into problems with flexibility. If you are considering purchasing a second home, you need to go talk to a professional, go talk to your accountant. I hope this has been helpful for you. If you have any questions, please don't hesitate to reach out to me. I'm Anna Hilberry. Thank you for listening.